What's up? What's up? Oh. What the fuck is that? Do you guys hear me? Wait. 2 seconds. Hello? I don't know if you guys hear me, but okay, you guys should be able to hear me. Alright, what's up guys? Welcome to the stream. Let me just go here real quick. Alright. Just drag that right here. Just to be more clean. Yep. Alright guys, how are y'all doing? Just came back from New York. Let me see if there's something right here. There's an unfilled gap right here at the M15. What's up guys? What's up? I know I didn't say I was gonna live trade right now, but man, just share it. Share that. Alright, so we just saw an inverse. So we should see covering right now to see a move back towards the internal gap here. I'll show you guys the time frame. I think it's better if I show you guys the time frame. Plus, correlation between ES and NQ. I'll have to, put my screen a little bit like this, but right now we have a 2-minute inverse, which means that at the top of this range, the buyers are being squeezed right now. They most likely are covering their positions. So let's see what it does here. We have a unfilled 15-minute gap, which act as a drawn liquidity. That is one of the best things you can look for. Do this. But right here, this is a good covering area, so a good short opportunity to stab towards this low. Am I going to take it? No, not for now. I think with all-time highs, I need a little bit more confirmations to enter in those. But it's a really good short in my opinion still. Just, it's a short based more on the lower time frames rather than having a full-on framework. But what you can say to yourself is there's a 2-minute inverse, there's SMT at this high right here, and there is an unfilled 15-minute gap. This could be enough for you to take a trade, honestly. That is enough for you to take a scalp. That's definitely a valid scalp, I'm not gonna lie. Plus on the 5-minute, it created that change in the state, a big wick. It's a open high on the M15, so open high means that you should have created the up wick of that 15-minute candle first. So if you hold the breaker, then you should see lower lows being created and higher lows. Yeah, New York was fire, I'm not gonna lie. New York was fire. The one thing that I don't like about the setup is the fact that we're at all-time highs. All-time highs you're gonna see so much resistance at the lows, so you need more confirmations in my opinion. Let's say right here, what would I look for? Let's say accumulation, then create some form of buy side that is a little bit stronger than just one candle on the AM15. As soon as we sweep it and then we start rejecting, then you could look for a possible move to the downside. But right now, it's not a bad short, it's just being at all-time high makes it more risky. That's it. But yeah, New York was lit for sure. And I didn't know. The thing is I didn't know like I would appreciate being in a room full of traders like that. That was really nice. Vibes were insane. What's up, Avix? Hello, guys. If you have any questions, just ask them. But yeah, it was really nice. So what we did, it was in New York. So I'm from Montreal, so it was I had to come down all the way to New York, and then when we arrived, we had the event was at 7 p.m. and there was like free food, a lot of people there. Also, there was like, in terms of the guys that there was all the guys that I posted a picture with, but there was also more guys and people that I didn't go and speak to because they were really busy. But I saw, who did I see? So there was Britt, there was Vinny, Dan, which are all like the three guys like managing Tradeify. Then there was I didn't talk to her, but there was Tanja Trades. She left earlier when I was doing a segment with Brett. Like I was doing a kind of a 2-minute podcast, and there was a lot of other people. EK, like a lot of people, but didn't have the chance to talk to all of them since some of them were busy talking to other people. But it was really nice, really, really nice. I suggest you guys to, if you really like, if you have a passion for trading, like connecting with the guys that have the same passion is really nice. Something y'all should do. How much do you risk per trade? Depending on the type of accounts that I have. Like right now, I have 550K straight to funded accounts on Tradeify, so I risk between $1,000 to $1,500 per trade, something like that. Because my RR is 1-to-1, my frequency of trades is pretty low, so I have to get paid. I have to get paid for being patient, basically. Like if I take 10 to 15 trades per month, I cannot risk 600. If I took one trade per day, I would risk 600, 700, which is like super let's say a decent amount. It's still 10% of the account, but since I do have a low frequency, taking from 7 to 12 trades a month, I have to up my size a little bit. So yeah, right here we have a whole lot of accumulation. Not looking to get into anything right now. If we do get a good setup though, I will definitely take it. But for now, I don't see anything. There was still an inverse right here and an SMT at the highs. You could still see price going down and filling this M15 gap. But like I said, all-time high. There's so much resistance at the lows. I would like to see more accumulation before we go and fill bullish P areas for the retracement. But this candle right here is a good confirmation candle. Not gonna lie, for sure. Let's see. You do take one trade a day. Yeah. Most of the time I do take only one trade per day or two max. That's really what I'm doing. So right now you just sweep that sell side, internal, and 15 closing like this. Could take a stab inside this gap. We could definitely take a stab inside this gap. I don't hate it at all. I don't hate it. If we do get a pullback, let's see how much risk this is. If I do put my stop loss right here. I'll take a stab here. I'll try short. What the hell is this? So in shorts, off that breaker right here, like to see a nice reaction back towards the sell side. Should be quick here. If you have more, let's say you're in heavier than me, that low here would be trim half, then the 15-minute gap would be trim everything. That's light scalp here. I want to see the reaction right now though. If we do get like strong candle closures above, that's not what I want to see. Like this is like a quick scalp back towards the sell side. Yeah, that should hit right here. I don't want to see that come back to my break even, I'm not gonna lie. Even if it's like super light. You see the resistance at the lows when you're at all-time highs, like it's just crazy. Last tap. I'm gonna go break even right here, I'm not gonna lie. I really hate how much resistance there is at the lows. If we don't push right now, I just don't want to be in this trade. This can't be real. Guys, come on. What is this? Oh my days. I think we do flush towards the 15-minute gap though if we get below this low. But that's crazy price action right here. Yeah, we're gonna get stopped out to break even. Unlucky. Tried though. So got stopped to break even right here. Trying to play for that short. Back towards the 15-minute gap. I don't want to be in this trade anymore. Like, you see the resistance at the lows. This could be soup for sure. I know it. But like, yeah. We went and tapped this zone like 1, 2, 3, 4 times. I know this could be like the last delivery for sure. And it was, damn. We're gonna take out this low right now, plus the 15-minute, but it's all good. Decided to go break even right here, which was this price action, bro. God damn. It will most likely dig down towards this internal gap, as you guys see, like on the 15. We're rejecting highs buy side, and we have really weak PD arrays here, bullish PD arrays. So this is exactly like how you can frame your trade in order to take shorts, not really based completely on an inverse. Like, I really didn't use an inverse like that here. I used the breaker, but the whole framework behind why I took the trade was the fact that we had an unfilled gap, and if there's an unfilled gap, then there's a lot of potential orders sitting there, and if there's a lot of orders sitting there, then price is most likely going to be attracted to that point in the chart. That's just unfortunate. I don't know if the stream has delay. I don't know how to fix that also if there is delay. But yeah, there is a early market close today, so I got stopped out to break even right here. Fortunate, but my draw got hit to the tick, which, you know, it's all good. It's all good. All right, guys. By the way, on God, if I have 100 likes, spam the likes. If I have 100 likes on this stream right here, giving away straight to Sim from their account. All right, gonna make the call to Brett instantly when I have 100 likes. So make sure you guys are not sleeping on that. So I need 100 likes every time. Like, if we get 100 likes, it's immediately a giveaway. And that's on everything I love. So straight to Sim funded account. Like, you don't even have to pass anything. You know, straight. Literally, like, a live account was given to you. So yeah, unfortunate. Damn. You see, like, the accumulation we were in. We got stopped out in the last soup. I said this could be soup. I knew it. Saw that happening so much, but what do you want? It's a super light risk scalp. You know, like, basically, guys, you guys know that like I will trade with y'all, let's say during the live, but trade with how I really trade with my live accounts is totally different. Like I don't take a lot of trades in a month. So what I'll do, let's say I have 150k accounts, I will, you know, go lighter size, let's say $200, $300 scalps, which is not going to do anything really to my balance. But on my main trades, which happen around 10 times a month, then I would, I would enter full size. But you will most likely, it could happen that I will enter full on size, like 1.5k in a trade times 5 accounts in a live session. This could happen, but we never know. But just to let you guys know, like, I don't take that many trades in a month. I understood with my data that the more trades you take, the harder it becomes for you to be profitable. Of course, when we're on stream, people want to see action, and I know that so many stuff are super valuable, to trade, and are gonna work, let's say exactly like this 15-minute candle was pointing bearish, sweeping the buy side at a all-time high with a bullish for value gap just below it. When you create for value gaps, let's say you push up super hard, there is 2 ways to look at the market really. It's either you wait for the pullback, see the reaction, and if there's an inverse, you stab towards the buy side. Okay, that's the first. Or how do you play retracements, Amos? Exactly like this. So you wait for a 15-minute fair value gap to be created, and then you look for weak signs of weakness at the highs, right here, inverse, and then you target the 15-minute gap because there's a lot of orders sitting right here. There's 2 ways you can really look at it. But the most important thing all the time is your framework, not your entry model. That's why, I tell you guys, focus on the framework. Oh shit, close that. Yeah, focus on the framework. Like, you could be profitable with a lot of entry models. It could be an order block, a breaker, an inverse, anything that you want. But it's just, can you consistently view the market every single day with the same approach? Am I looking at unfilled gaps? Am I looking at SMTs for my sign of weakness? Am I looking at breakers? Do I look at candle closes, candle opening, wicks? So many ways to frame a trade. And one is not better than the other if you just master it, in my opinion. Let's say right here, there was an inverse. But did you have a framework telling you that, okay, we were going to go towards the buy side? If yes, then good. If no, then it was most likely not that good of a trade. You know what I mean? $28 likes. There's 60 people here. If we get 100 likes, I'll give away a straight to sim funded account. 100 likes, so spam the likes, Come on, guys. I need more likes than that. But yeah, if you guys have any questions, make sure to ask them in the chat. It could be anything, literally anything. A lot of you guys have really good questions. Bro's hanging out with the big dogs, yeah. Not really, like, man, this would be so insane. What happened basically was that there was people going to shake my hand, and they already knew my name, which was, absolutely insane. Just because you post on Twitter, show your journey, there's people that, that will follow you and appreciate your work. So will you open more trades today? We don't know. I don't know exactly if there's going to be an opportunity. If there is, I'll probably take it. To be honest, I'm not going to shy away from trades on stream. If there is a $200 scalp to take, I'll take it. we lose, we lose. If we win, we win. That's trading. You know, I'll trade exactly like I show on my YouTube. With what I'll do, like I said, is just I'm gonna enter with lighter size and not on all my accounts, because this is not exactly how I trade with my live accounts. That's really it. But I will take trades on Tradeify. You know, I don't know if you guys can see. Oh shit, I didn't even show the time frame. I'm really retarded. I'll do this. But if I do this, yeah, you guys can see that I'm on Tradeify. Tradeify, or let's say I go here. Yeah, Tradeify, and on my Findit account. So that's really it. You from Montreal? Yes. I want to back this. We're gonna do a backtesting stream pretty soon. Every Sunday we're gonna do backtesting. Like I said, I'm gonna share the data with the strategy that I'm gonna work with y'all to, you know, perfect in a sense. Just coming back real quick. Do you guys want beat? You know, background beat? Or you guys prefer with no background song? I know a lot of people like the background beat because, you know, they're doing something else. Either they're backtesting or, you know, they're trading it. They want to hear something. But a lot of people are also muting the stream because of the background beat. I am thinking of joining your stream. I am funded and I get impatient. That's really good though. That's one thing I used to do back then, especially on PM streams. Like when people were doing PM streams, usually my strategy did not happen during the AM. Not much though. And then what I would do is that I would just wait for someone to go live and, you know, just hear him in the background. That was it. Ooh, okay. Add some music. Yo, who wants some music? I want to know who wants some music and who doesn't. I don't know how to make a poll also. But yeah, right now, basically, by the way, I'm gonna start posting more shorts, more short forms, and I would like to have some. I would like you guys, I would really like if you guys can comment and tell me what I can do better for next time. I would appreciate that. Any discount for the membership currently going? What do you mean exactly? I don't know what you mean exactly. Like the VIP? My Discord? I don't know exactly what you mean, but no, no discounts. I'm sorry, but man, just tune into the YouTube live, bro. They're the same. They're the same. So like guys, if we can get 100 likes, straight to Symphonet account. How do we not get more likes than that? What about start the live previous open and make a top-down analysis? All right, but the top-down analysis on an all-time high will do nothing, you know, because basically like what you need to know is that when we're at all-time highs, everyone is just buying the fuck out, you know. So you just don't want to fade the market too much on the higher time frame, but you could still take short scalps on, let's say, based on a 1 minute structure. That's what I like about scalping, is the fact that you don't really need a higher time frame bias to take 10, 15 points out of the market. When people ask me to do top-down analysis, like, oh, sorry. Yeah. When people are asking me to do top-down analysis, like, I can, but I don't really need a top-down analysis or, you know, to know exactly the bias on the daily chart to take a short scalp towards an internal gap, or, you know, to take a scalp towards a short-term sell-side liquidity pool. I just need to know the timing of what's currently happening on the chart. So basically, if you want me to tell you what I see on this chart, let's say daily wise, right? Then when we closed on that candle right here, I knew we were absolutely bullish, because on the daily chart, you just want to look at candle closures and, you know, candle openings. That's really what you want to look for. So right here, we swept, you know, previous candles low into this gap. We're closing back as a reversal. So I know we're bullish, all right? So on the day, I know I would want to take buys, and I know there's most likely going to be a bullish distribution. That's the first thing. That's how you get your buys. Then you would scale down to the 1 hour chart. Say this was the close, all right? This was the close. So really, if you're taking trades based on the higher time frame and the daily, the 4 hour, you're not always going to have a trade on New York session. Sometimes the trade is going to be on Asian, sometimes on London. That's really what I don't like that much about, you know, putting all your analysis on the daily and the 4 hour chart. All right. Now the 4 hour chart is good, but let's say the daily. All right. I wouldn't go above the 4 hour. Let's say the daily would just give me a brief overview, but the 4 hour would be better for me. So then right here, let's say I'm bullish and I expect a bullish distribution. So right here, I would look for a possible confirmation to go long, and let's say I would use this order block right here that we created to go long to target the buy side, based on what? That the daily candle was a reversal and I expected a bullish distribution. That's really it. So boom, you could have a long scalp right here on the daily chart, stop loss, let's say inside this gap, and then you would target a 1 to 2 if you're really looking to get into trades that are more higher time frame. But of course, like I said, if you're looking at the daily chart, you need to position yourself sometimes at areas where it doesn't align with the New York Open, which is what I don't like. But let's say if I look at the 4 hour right here, what I would expect, let's say right here, is that this was NFP. So NFP took out the buy side, took out my draw, which, you know, in this case, if the higher time frame draw is already taken, then you need to look at lower time frame candles to frame a trade, and you should be scalping a little bit more than taking, you know, bigger picture plays. So that's really one thing also about trading that I suggest you guys to do, is like, too many people are focused on, you know, exactly that, the question that you asked me, top-down analysis, daily, 4 hour, like let's say weekly, daily, 4 hour, 1 hour, M30, M15, M5, M1, and everything needs to align together. But there is not always good bigger picture plays. So you need to be versatile in a way that you can adapt to that. If you see that your top-down analysis does not make any sense because your draw's already taken out, then on the day you would need to scalp. You would need to take a scalp to eat, you know? you can't expect a huge move in the market or a huge distribution just based on luck. All right, you need to have super strict rules, and those rules will tell you, okay, in the last 5 years, every time we had this, then this happened. I should put my stop loss to break even, let's say here, and etc. etc. So it cannot be any guesswork. It has to be super, strict, in my opinion. So yeah, that's pretty much it. Not every day will give you a good opportunity in the market to see huge distribution. So sometimes you will have to take short-term scalps into a buy-side liquidity level, or based on the M5 structure, M15, H1, depending. But let's say that's really it. I could see here, all right, we're at all-time highs, and a lot of people, let's say in the ICT space, all right, I will give you basically the model that everyone just plays on YouTube, on Instagram, anything, all right? So every ICT trader, not me, all right, because I use ICT concept, but my main strategy is not really based on ICT like that. But let's say what they're doing is that they always look for what we call like 10 a.m. reversal, okay? And we all know that, let's say for me, I backtested years and years of data, and I know that reversals don't really happen like that on 10 a.m. Let's say the reversal will possibly happen at 9:30. If you always wait between 10 and 11, you will not see that many reversals, all right? Sometimes like the market is absolutely bullish and the 9:30 open shoots up super aggressively, and you just don't see any reversals for the whole day, all right? The next candle prints and it's bullish again. Let's say exactly what happened today. So in those cases, people will always try to play shorts on a bullish market. They will always try to play shorts, but like I said, if the higher time frame is not completely telling you that, okay, we will dump down all the way to the external sell side, let's say, why would you take a trade on a bull trend with a high RR? You should just be content with a quick scalp, and then on the days where the market is just giving you the best possible setup, then you could swing for bigger picture plays. That's how I view it. But yeah, that's pretty much it. Is there any other questions, guys? Was there a change in membership recently to VIP only? What's your thinking? Why do you guys ask so many questions about the VIP, man? Just stick to the YouTube live. The YouTube live is good enough. What do you mean? What do you want to be in VIP? Oh my. Good morning, Joyce. Since your win rate is quite high, how much risk should you take to not blow your straight to funded account? 1% risk is okay. Take in your strategy. All right, I will basically give you a brief overview of how I see the market. Not how I see the market, but how I manage my accounts, basically. How's your dog doing today, man? Is he eating steak? I don't have a dog, I have a cat. I know on the time, when I start my stream, there's like a timer, and we see a dog, and I was kind of pissed because I wanted my cat to be there, but good. Yeah, so basically I have 5 straight to funded accounts for 550k straight to funded accounts, and for me, I know I have a low frequency of trades. If I have a low frequency of trades, it means that, let's say I have I trade between 7 to 12 trades in a month, all right, which is low, all right? But with my data, I understood that the more trades I take and the more I engage in the market, the less I'm able to profit out of the market long term, right? I get into huge periods of drawdown if I don't have a low frequency of trades, and I know that this would impact my psychology. So for that fact, I'm sticking to this. Perfect. Now this is my plan. I need to follow my plan because I have the data that is backing, the statistic. So right here, since I have low frequency of trades, I'm risking a little bit more on my trades since I don't have one trade per day. If I had one trade per day, I would possibly risk, let's say 600 if I had to. But right now, let's say since I have, on average, I would say 10, right? 7 to 10. So I risk between like 1.2K to like 1.5. And why? Because my win rate is pretty high, and it's pretty rare that I will lose, let's say, 4 or 5 trades in a row, which would blow my account in this using exactly those risk parameters. So that's how I manage them. Low frequency, I just go in heavier on A+ setups. But if you love to take more trades, let's say, and you don't care really about being in other trades that's in the market, being in a B+ setup or a C+ setup and taking stabs with higher RR, then just adapt your risk with it, in my opinion. But on A+ setups, it's like, think about it like a casino, let's say. Not like a casino, but let's say when you're playing poker. When you're playing poker, sometimes you have better hands than other times, or let's say blackjack. Sometimes you will get, hands where you should double your position. For me, I understood that I should only stick to those, cards or those decks where I am dealt the best possible cards. See what I mean? So there's two approaches. It's either you want to play all the cards, but for me, I see it as, all right, I'm going to stay out of the market, and as soon as I'm going to be given my A+ setup, I will go in heavier, all right? Because in a span of 5 years, if I always do that, I'll outperform my statistic if I'm only trading, if I'm taking 20, 30 setups per month. What do you use for backtesting? I use Tradezilla or FX Replay. That's really it. But really good question about the risk. But you see, like, how I responded, it had nothing to do with possibly what you thought I was going to respond to. Like, I could have just said, yeah, just risk 1%. But that's just my approach. It's either you take more trades, less risk, or less trades, more risk. How many of you guys just go heavier on your A+ setups? Let's say your A+ setups would happen 10 times per month. You guys go in heavier on those, or you guys just take on the same risk? Because that's one thing also I learned about the best traders in the world. Let's say if you look at Lance, like Umar is not one of the best, but he's really good, Of course, he's one of the best, of course, but let's say, I don't know if he has like more than 100 million in profits, but like Lance. But they're doing the same thing. There's not always a good opportunity in the market. How many likes do we have? 39. If we get to 100, I'm doing a straight to sim funded account giveaway. Told ya. Come on, guys. So right now, what am I seeing? All right, we displaced up super aggressively on this 15-minute candle. Boom. Right here. So if this candle right here on this 15 prints bullish again, that would be a good sign. Why? Because we would create a 15-minute bullish for value gap. What do I know about those gaps? I know that there's a lot of orders right here since we displaced, all right, and people, the buyers right here that got aggressive, will try to defend their position once price is going to go back towards the 15-minute gap. Knowing that information, I know there's a lot of passive buyers on the 15-minute gap, and if there's a lot of passive buyers, then if I find signs of weakness at the highs right here, let's say an inverse, an SMT, then I could take short scalps towards the internal gap. That's basically it. That would be your framework on that trade. Just look at the chart. Let's say just go on a 15-minute chart that you would, let's say, at the end of the day, and see how many times we filled those 15-minute gaps when they formed, immediately after they formed. That right here, that happened at around 10:45. Happens a lot, quite often. So this is a framework you can use, not just bounce from a gap and take this short scalp or the long scalp. My trading views, my trading views lagging. Damn. My voice got cooked for a second here. I think the coffee just went in. But yeah, so right here also, one thing I talked about in my last video on the open high low close. So let's say there is this candle, we took out the high. So if there's something to your left, all right, let's say there's something to your left, which we don't have right here, you can use the mechanism of an H1 candle to understand how you can position yourself for shorts on the higher time frame. So if you know that statistically you have more chances of closing bearish on this candle than bullish if there is a key level to your left, all right, supply and demand, basically. You only need to predict one candle, but the most important thing is having the right timing, right? So when you understand what's really happening inside an H1 candle, you know that there is accumulation first, then we create the upwick of the candle on the second, then we shift below right here, let's say the most recent low, creating a market structure shift. We hold that market structure shift, and then we start creating new lows. So what you can do, let's say, is either you wait for the market structure shift to happen here, knowing that this could be potentially the upwick formation of a bearish candle, right? This is what the timing of ICT is really good. This is why basically ICT is good, in my opinion, is because it's giving you a timing framework, knowing that a bearish candle will most likely create its upwick before the downwick in most cases when we're distributing correctly. This gives you a good perspective on when to look for those highs, when you should see those highs being formed. And usually we see them form around like the first 20 to 30 minutes, usually. So right here, what will happen will be the same thing on the 1 hour. So you created an open high right here. So you're creating the upwick of a possible bearish candle. This could be potentially a bearish candle, but when would you know that this candle will flip bearish? It will be the opening price. So the real market structure shift is going to be when this candle will flip. I don't know why my trading view is lagging like this, but the sooner you enter, the bigger your RR. All right, I talked about that in one of the first videos I made on YouTube. But let's say you enter, above this range high on a market structure shift. Why is it still a good model? Because if you can catch one distribution, that would eat 4 or 5 losers. That's really it. But that's, in my opinion, more of a live account model, not really good for prop firms. Why? Because it's such high RR, and if it's high RR, then you will most likely get, you will get eaten by the drawdown rules. That's really it. But a lot of people like the power of 3 and let's say the H4 power of 3. I see that a lot on YouTube and on let's say Instagram. A lot of people are talking about it. So 42 likes, come on. Right now, no trades again for now. But this 15-minute gap will be formed. Let's see if we can take a trade off of that. And generated almost, equal lows, perfectly equal lows. So that's a good, possible short. Create equal lows and then filled gap. So right now, let's say you have a move up. All right, you have a move up aggressively, and then you form a fair value gap here. You hold it, then you create a new high. ES doesn't sweep it, SMT. Then you disrespect that gap. Short towards the gap, equal lows. That's a good trade. Really good trade. Yeah, I know the market's gonna close that one. That's why I traded right now. Any other questions? I'll do this. Boom. I'll do that. We went to 15-minute fair value gap downside, created SMT, inverted that 1 minute to the upside. Won't that be a good long? It was 1-to-1 restored. Right here. Oh, let's say okay. You're talking about this. I mean, this could be a good long, of course, but it's not that good because I'm really looking to see a gap when we enter. So let's say this was the 15-minute. Let's say we're here. All right. This is the 15-minute low, so this would be the 15-minute gap. All right. What you would be looking for is not, let's say, a gap, the gap up here. You would be looking for the leg that created the sweep to have one fair value gap in it. So if the leg that created the sweep got a fair value gap, you can know that the sellers are located right here. So then if you hold that bullish gap and squeeze those sellers, you have a move back to the upside. But right here, basically, it was a lower probability trade in my opinion, since the gap there was structure just below the gap, which means that we formed a low bearish order block. So you would enter in a trade that is more considered as a bigger picture play. If you're targeting that buy side right here, you're playing off like almost 5-minute structure right here. You see, like you would be playing off that 5-minute breaker, which I don't like. You want to take quick scalps, quicker than that. Wait, what the fuck? That was a nice sweep. Damn. Where are you from? I'm from Canada. Oh, this is a big wick here. Damn. Huge wick. This doesn't look too bad to get in shorts. Not right now though, but if we can get below this low here, I'll possibly be interested in shorts. 27. Not bad. I want us to get below this low. Then I will try to take a short scalp back to the downside. That would be my short. 1018. I was trading the inverse. 1018. No, it was not bad. It was not bad, but like I said, you would want the leg that created the sweep to be where the fair value gap was formed. So like right here, the leg that created the sweep from swing high to swing low was this swing high to this swing low. Is there any gaps? No. So it's a lower probability trade than, let's say it's a lower probability trade to take an inverse from this gap than if it was here. Here you're really playing off the momentum of the market, you know, and the fact that once you see those buyers stand up inside the 15, you don't know if they're gonna get squeezed here because they already did the move that you were looking to get into. You know what I mean? Right now, I'm looking for possible shorts if we can get below this level right here. So if we can mark a structure shift, I will look for possible shorts. Let me see ES, how it's doing. There's SMT here. Still an unfilled gap on ES. Wait. There's SMT here. How? Wait. That's a huge SMT. That is a huge SMT. Alright guys, by the way, 100 likes giving away straight to Sim funded account. I don't know what you guys are doing, not liking right now. Come on, come on. Come on. Who do you think is the best trader right now? What a good question. Best trader in what? Prop firms or, you know, trader in the Twitter space? Tell me. Because if it's best trader in the world, no Twitter influencer is going to be on that list. That is for sure. All right. That's one thing, that's for sure. But I do think some people are pretty decent in the Twitter space. If it's Twitter, I can respond to that. But just let me know exactly what's your question. But that's a good question though. But, you know, I wouldn't say who do I think is the best. I would say who do I prefer in terms of styles and in terms of what I know about the market. Who do I think has, let's say, a good approach to the market and a good style. I know I have my answers on that. That's for sure. But that's a good question. Just let me know exactly what you were talking about, referring to. So there's a gap here. We just created a bearish 50-minute fair value gap. So right now I'm gonna wait for it to get tapped. How was it to meet for a Forex Ike? It was nice. That guy has such a good vibe, bro. I'm telling you, like, in terms of vibe, that guy is just a vibe. I really like him. There was also one other guy that I met. I didn't know, like, he does not even have Twitter or anything, and he was just... Basically what we did is, like, I went there at the beginning with my brother, and then a few guys approached me because they knew me because of Twitter, and one of the guys, he was called Ricky, I think. Such a nice guy. And he approached me, and then he he showed me his payout. I showed him mine, and we discussed not only about, what we think about trading, or what do we like about the firm, etc., etc. We also discussed about strategies. He was like, yo, I'm doing this works right now, this is so good, etc. And I was like, damn, I didn't see it that way. I'm doing this. And he was like, oh shit, that's like what those kind of meetup will give you in some sort. Like, you will not just meet new people. You will also gain possible real hindsight. Forex Aikid is like Donbo style. Yeah, kind of. I think he has negative RR, but what I like about him is that he doesn't compare himself to anyone. You know, he does his shit and he doesn't care about what people are, you know, are saying. Exactly like me, basically. Everyone is, if you're, let's say, if you don't like my RR, I could not care less, really. Yeah, you could, I'm telling you, if you step in one of those, let's say, meetups, bro, you will see some incredible traders. Like, you will see traders that, you know, are pretty fucking good. That's one thing. And you can discuss with them. If you have value to bring, man, this is a good exchange of value, that's for sure. Just smoking weed and doing some scalps. I don't know about what he does outside of trading, but you know, I respect the guy. He's a good guy, polite, you know, good vibe. Yeah, that's really it. I really like humble guys, you know, that's really it. I just can't with someone who's not humble. I just can't. Like my body just, people need to be, the guy that I'm meeting needs to be humble. Like, hey, I feel it. That's just genuine, being genuine. I think you can have confidence, but not ego. You can feel ego. Do you think volatility in NQ is reduced since May after tariff? Because I feel like AM sessions are not as good as it used to be. Listen, when there is a huge move in the market on the higher time frame, you're most likely going to accumulate, and the price action will be pretty bad, especially also when there is moves in the overnight session. So let's say, like, if we look at the market on the daily chart, like, it had a huge move. Like, this is just crazy price action throughout. Like, if you see this on the daily chart, we had a huge dump down, right here, manipulation. Then right here, this price action also was considered bad because it was accumulation. Then we had push up, accumulation again, push up, and then right here also a lot of people had a hard time trading because the daily chart was not on a trend. Basically, it was not distributing all the time. Right here, those days are the days where I'm telling you, you can't expect bigger, like super huge swings. This is not good to trade high RR and to expect like distribution based on the daily chart, you know. So how the market does, basically how it's working is that it will distribute, let's say it will accumulate, distribute, accumulate, distribute, accumulate, distribute, accumulate, distribute, you know. So what is this accumulation? It's finding fair value between buyers and sellers. At one point after the distribution, even if we're at, let's say, a premium, buyers and sellers will still agree on price. It's the new fair value at, you know, in some sort. And then they will fight, and price will either keep going up or keep going down. Who is your favorite trader? Who's my favorite trader? Who's my favorite trader? That's a good question. That was, let's say, in terms of style, like, or who do I enjoy most as a person? If it's style, damn. I would say damn, there's not a lot of people. I would say, to be honest, favorite trader. Okay, my answer is purely based on the fact that I saw the guys come up from like 0 to now. And I don't really talk to him like that. Like, we talked a few times, but my favorite trader, let's say, in this space, let's say I will say my favorite trader all time and my favorite trader like on Twitter, right? My favorite trader all time is Lance Bryston, because his take on trading are just super similar to mine, right? Basically, he says that psychology is a concept that is absolutely, overvalued in the trading space, and that so many people think they have an edge when in reality they just don't have one. They don't have the data to back the fact that they have a statistical edge on the market. That's really one thing I preach. All right, I really like him. In terms of Twitter traders, like in the Twitter space or YouTube, Instagram, etc., I would say Johnny. And the reason why I say Johnny is the fact that I saw his come up from 0. Literally, like, he was trading, because back then I started trading in around early 2022, and he was posting videos and stuff. He was on CFDs, and then I saw him from going from the bottom to the top, which I really respect. Your style matches with PB trading, guys, but more technical and mechanical. Yeah, I saw them. They look pretty nice, pretty chill. They're funny, guys. Their reels and stuff are so funny. But yeah, I would say that. Lance, it's Lance. It's a stock trader. He's a stock trader. But how many likes do we have? 47, come on. Do you guys want a straight to simp under the account or not? Come on, guys. And also, one thing I like, let's say, I would say about Johnny, is the fact that he uses what the trades that he takes are purely based on what he teaches, which is nice. Because it's so easy to look at the market at the end of the day and say, like, okay, this was the trade you could have got, this was the trade. But if you don't actually take them, it's too easy. You need to take them. You need to either take the win, take the loss. How often are you planning to come on here on YouTube? I would say 3 times a week. So yeah, 3 times a week. Other people that I like in this space. Damn. Are you French? Yes, I'm French. And also, like, I learned a lot of things about, Lens and other markets. We are, let's say, prop firm traders, but there's so many other markets and so many stuff that are good to know about other markets. Let's say, like, what I learned about the stock market is the fact that, it's less liquid than the futures market, which means that there's less, I would say, whales. It's not a market that is as dominated by, institutions, high frequency algorithms, etc., which is in a sense more, let's say, easier to trade, and is something that is easier to trade, and you can find in some sort more edge than on the futures market. All right, that's what I learned also about him. Let's say if you trade individual stocks, all right, low cap stocks, let's say you log in and you want to trade a stock, but they had basically, if it's a low cap stock, the direction of that stock is in most cases based on the catalyst. So the news that happened, in the last day or week of, on that particular stock. So let's say basically what all these stock traders are doing, basically I'm going to tell you, is that they look for an individual stock, low cap stock, and they look for gaps. All right, so gap, boom. And what this gap will tell them is that if we gap down, let's say, it means that they know their narrative basically based on the gap. And since, let's say like there's a huge news on one low cap stock, and it says like, okay, they just lost this amount of money, or the CEO just retreated from this, low cap stock is most likely going to go down. But let's say what they're doing is they find their edge based on gaps and having order flow, also the volume too. So they look at the order flow chart, the footprint chart, basically telling them that, okay, buyers are here, sellers are here, and since it's less liquid, there's less spoofing, there's less manipulation, so it's more tradable in a sense. That's what they preach, but it's a whole totally different view of trading than what we're doing, that's for sure. You like Lumi Trades? I don't really know her, but I like the content. It's pretty clean. Like, let's say I saw the shorts and stuff. Open the stream link. What do you mean? What do you mean open the stream link? What question I have, bro? After becoming profitable, what made you think you should start going live and make yourself visible to public? All the stuff that you're doing right now. Oh, that's a good question. But I think it's pretty easy. Let's say let's say you were a basketball player, right? Let's say you were a basketball player and you would get paid only if you made 20 points per game. Okay? I want to speak to you in this live. There's no chance. I'm sorry. So let's say you were a professional basketball player, and you would only be paid if you made 20 points per game. And it's super hard to make 20 points per game. Then, all right, so you have this kind of pressure to, be super good at what you're doing. So what is going to happen is that if you have bills to pay and you are starting to not, perform as much, then this will impact your psychology and you're going to play bad and you will not be able to make those 20 points. So then there is something called, let's say, brand deals. Let's say Nike would approach you, and then let's say I'm a basketball player and I'm getting paid based on if I'm making 20 points per game or not, which is the analogy that I'm making 20 handles per day, let's say. And Nike approaches me and says, all right, I'm gonna give you this much money if you can promote my brand, etc. And you would have stable income going in to your bank account every single month. Do you think the pressure of making 20 points per game as a basketball player would go down if you know you can pay your bills based on the Nike brand deal? Of course. You know what I mean? It's exactly the same thing. I really think that if you are a live, let's say, if you're a full-time trader, you consider yourself a full-time trader, if you don't even, let's say if you don't work a regular job, if you don't have a stable income coming in every single month, you will be outperformed by someone who has that, in my opinion. A good trader, in my opinion, is still has stable income coming in. So it is a way to find stable income in some sort. That's really it. I made a huge analogy with, let's say, a basketball player, but that's the same thing. It's like some people will be here saying, oh, if you're so good at trading, why do you go live on YouTube? Why do you have a Discord? Why do you do mentorships? Because it's all other sources of income, which is gonna let you, like, which is gonna make you a better trader, which is gonna lower the stress related to making money with your main source of income, which is, let's say, trading. And then you will just be a better trader overall because of that. That's the same thing. If you depend on the money that you make from trading to feed your family, the chances are you will have a hard time making profits in this market. All right, W hater. I will not respond to that, but like I said, that's just basically just the answer. But think about it, if that makes sense. I think that makes sense. Like, why does Ronaldo have a brand deal? Why does LeBron James have a brand deal? They make enough from, their contracts, their NBA or FIFA contract. Yeah, and also, like, having a community is way better than trading on your own. It's so lonely just trading on your own every single day, waking up and let's say for me, not taking a lot of trades, like it gets lonely. Seconds. Wait. Yeah, for sure. I get that. But when you're posting your P&L every single day, the P&L really will tell you who's real or not. Especially what they show. If they show if you rather show cars than you're trading P&L and giving away value, it tells a lot, in my opinion. It tells a lot. You won't believe me and my friend were losing, but we started sitting together, coming to a cafe and trading. We passed 5 evals. Nice, 10k payouts together. Good shit, bro. That's what we're talking about. Not using to hate when you got no clue who the guy is. Listen, one thing is that you'll never, someone that is higher, like above, or someone who's doing better than you will never come down to hate you. That is one thing that is true about this life, is that someone who's doing good, who's happy with the amount of work he's putting in every single day, will never hate on you. Never. Will never receive hate from someone doing better than you. But yeah, that's really it. So right here, let me see. What time is it? 11:54. Each one can will close. Most likely no trades right now. Women in verse is not valid. You're talking about this one, or the short one? If it's the short one, of course it's not valid because you have gaps holding on a higher time frame than that. So there's a 5. You're rebalancing to a 5 minute. So for you to have a trade, let's say off of here, you would have to, the 5 minute gap should have been lower. We cannot tap into the 5 minute gap. But did you really think I could let you hop in the live, bro? Like, really? Plus you're hating. Oh my god. Y'all got him dead. What's up, Jacob? How you doing, bro? Some people make me smile, bro. I swear to God. I have to laugh. I have to laugh at that. Because the thing is, like, especially in the trading space, is like, it's such a space. It's such a toxic space that there's so many people who are focused on someone else's journey. Like, what are you doing? Like, let's say in the beginning stage, what I was doing was that I was trying to learn from him, then him, and I saw it didn't work. So what was I doing? I was not going into their live stream typing in, yeah, you're not a good trader, your strategy doesn't work. I was like, okay, in my head, all right, this guy's ass, I'm not looking at him, the strategy I backtested it, it's not working for me, I'm gonna go here, I'm gonna do my own stuff. Why, it will not benefit you to, waste your time on someone else's stream, let's say, or, typing in their Twitter posts. These are just like, I call those, I don't want to call it, but, there's some activities that some people do, and it has a word for it. If someone can find it. Can someone tell me what kind of activities these kind of comments are? Yeah, that's one thing also, is like let's say once you lose, let's say you post a loser, everyone turns into market makers. Or every time you're trying to either show the real part of trading, which is wins and losses, or you're up 3k on a month, 3k USD. Oh, that's 27,000 in a year after taxes. Like if you make too much, you're a scammer. If you don't make enough, you're better off working a regular job. If you don't show your payouts, you're this. If you show your payouts, you're faking them. Like the hate has to stop in this space, bro. Like, hate the guys that need to be hated. Music too loud. Oh yeah, damn, my fault. Wait. I think here. I think that would be better. Could you please explain more when valid and invalid? So right here, let's say you would look always for a swing high to swing low. All right, let's say this is the inverse, and if you disrespect it, all right, you would try to target this internal low basically. But if there is a 5-minute gap right here, you cannot short even if you disrespected the gap on the 1-minute chart right here. You can't. Why? Because you are in a gap from the 1 to 5. That is, we're currently trading inside a gap from the 1 to 5, right? You need the leg that created the sweep to have one singular fair value gap from the 1 to 5. So right here, right, let's say first off there was 2 gaps here on the 1, so one here, which makes it not that good. All right, you would need 1 plus right here. If I go on the 5-minute chart, there is a 5-minute gap. You see, there is a 5-minute gap from the swing high to the swing low. So if you're tapping into a bullish period, right, why would I short? It needs to be clear. No 5-minute, no 3-minute, no 2-minute gaps, and no anything. Does that make sense? What is your risk on 550k? It's around 1.2 to 1.5 per trade, because I take less trades in a month than most of y'all. Yeah, pretty much it. Is the music better or no? What's your best time frame for an entry according to your data? Okay, it's the 1 and the 5. For me personally, like the 1 and the 5. Music is good. Thank you, Jacob. Did you wake up at 8:30 by any No, I didn't. Why would I? I know you did though. Don't lie, Jacob. How many accounts did you either pass or fail with that 8:30 candle? We know, brother, we know you woke up at 8:20. 8:20. I know it. Let me see if the NFP candle was good. 8:30. Oh, you did pass. Let me go on the 1 second chart. The 1 second chart will tell me. Oh yeah, bro passed. Yeah, bro passed his accounts today. Passed one Tradeify. Did you blow any accounts? That's good though. Congrats, you passed one. No, I don't have to wake up at that time. I already have straight to funded accounts. Cannot take the risk. Shit, bro, I always keep getting out. That's good. Right now, I don't see any good opportunities whatsoever at all. 42. It's like, yeah. That's why also I don't have any time. Let's say I don't have a time window where I would look for a trade. Let's say I don't look for trades only in AM session, because I think sometimes the price action is cleaner during PM, and if I was just focusing on the AM session, then I would force trades. On average, how many trades you take in a week, and what's your ideal RR? I usually take from two to three trades per week. No, yeah, 2 to 3, sometimes 4, but it's pretty low. Usually on average 3 per week. And my ideal RR is 1 to 1. 1 to 1. Does the background look good? Do you guys like the light behind? Right now there's like there's shadow. I don't know why. It's because it's dark outside. How many losing streaks you had last month? I didn't have any lost streaks at all. I had like, I don't exactly remember my journal, but I posted it, and I think I had like 4 losses, 8 wins, 1 break even. So not the best, you know, up for 4 R's. So which is good, you know. If your R multiple, let's say 1 R is 2% of your account, that's 8%. How much chart time needed? It's not about chart time really. It's more about how focused you are during your backtesting sessions and what's your approach. Someone who's doing, let's say, you could be doing 10 hours a day for 5 years, but you don't have the right approach in backtesting. You're lying to yourself, or let's say you don't have the right data. You always, let's say when you're backtesting, you're like, oh, I wouldn't have taken this trade, and then you just find every single reason to just lie to yourself. The more you're gonna lie to yourself like that, the more time it will take for you to build up a real strategy. So depending, I think you could speed run that, you know, that process if you find a good mentor. That's 100%. And also if you have the right approach to backtesting, if you have the right approach, if you already know exactly what's your flaws, if you're not comparing yourself to others, if you don't, you know, start over trading and stuff, and over complicating stuff for no reason. Yeah, you could because trading is not something where you need to be the best to make money. It's not like sports. You just need to be good enough and manage your risk well enough to get one piece of the pie. It's really about it. But yeah, how much chart time needed at the end? I would say, like, if you're focused and you put in, you know, I would say like 5 to 8 hours every single day, journaling, backtesting, live market, and every single day you're looking to get better, 1% better, it could take like 1 year, I would say. Not to be the best, of course, but to see consistent results, like to make on, let's say, $200 days. Depending on your approach. Most of the time, like, not most people have the access to that much time in a day, which is like 8 hours. That's a lot. It's quite a lot if you are, like, let's say 30 years old. So that's why a mentor is a good option at this point. But if you're young, the best thing you can do is do it on your own without anyone. Yeah, my opinion. Any other questions? The market is closing at 1 p.m. Let's see if there's any trades, but for now, all-time highs, like you guys see, are just getting bought up every time. So I don't even see a possible trade from today, really. Like, of course, there was this one, possibly like the short that I took based on the 2 minute. You see here, there was a 2 minute inverse plus an unfilled 15 minute gap plus SMT. So I entered like on the pullback right here, somewhere here. I had my stop loss right above this high, and I was targeting this low for a 1-to-1. Thing is that when I entered, it started to go down. No, I entered right here on this candle, after this candle. So on this candle right here, and then started to go down here. This is where I put my stop loss to break even, and then tagged me out on this candle, which is on the 2. So was quite a lot of accumulation. That's where I got tagged out of the trade at break even right here, but it would have been, let's say, small $200 play. That's pretty much the trades I saw today. Of course, you could have taken those longs here, but this was more of a bigger picture play because the leg that created the sweep was not, I don't consider this the leg that created the sweep from this swing high to this swing low. We created the sweep into this 15-minute gap from this swing high to this swing low. So you would want to see the fair value gap that gets disrespected from this leg right here, you know, again. How many likes? 57, damn, that's not bad. 57. If we get more, if we get 100, straight to sim. Boom. On God. So now we need to pray for price to pull back here. if price pulls back to the 15-minute bullish for value gap, it will need to wick down further into it before with aggression. Yeah. So you would want to see price go down towards this 15-minute gap by creating a swing high first, then the swing low, and the leg that created the sweep needs to have one singular fair value gap from the M1 to the M5 chart. And then if there is any SMTs here, this is another possible confirmation that this would be better again. And then right here you could find a scalp back to the upside to fill internal gaps. So like basically by looking at the call that we had today, like what I said is exactly this. All right, so market structure wise, if you're looking at a higher time frame, let's say the 15, I think it's the best intraday if you want to find scalps. But let's say you're looking at a 15, what you really need to take a trade is this, right? You would need price to form a fair value gap on the 15, let's say. Let me break it down really well here. So boom, let's say this is the fair value gap. I'll use the red. All right, let's say this is the fair value gap. Nah, this red is S. We use black. All right, bad. Okay, so let's say this is the 15-minute fair value gap. What you would want to see is us, let's say, sweeping or tapping into a key level. So either, sweeping buy side liquidity or a H1 OB, or let's say rejection block. That would be good, all right? Best case scenario, but you guys know that when you're tapping in H1 order block or rejection block, or even if you're sweeping buy side, at the end of the day, it's just stuff that are a little bit subjective about taking the trade. It's not like you don't necessarily need to tap an H1 OB, right? But best case, you tap a higher time frame Peter rate, all right, or a fair value gap on the higher time frame. Fair value gap. So boom, once you tap into that key level, which I'll say here key level, what you're going to be looking for here is for signs of weakness to go back towards the internal gap. So since here a 15-minute gap formed, all right, what you're going to be looking for is signs of weakness at the highs to short back towards the gap. So there's two ways to approach it. First, you would use the power of 3, all right? So power of 3 states that, let's say a new candle opens, the high of a bearish candle should be formed first, all right, before it closes. So right here you would wait for price to open, create the high of that candle. So as soon as it starts going down and you wicked previous candle's high, and then this candle looks kind of bearish and it has this right here, so a market structure shift, you would take the shorts, stop loss at the highs, targeting the gap. All right, that's one thing you can do. So that would be like, let's say the power of 3 on the M15. That would be your approach for this trade. So open high, flip on the 15-minute gap, based on the 15-minute chart, sorry, and then you would take the market structure shift back towards the gap. And then the other approach would just be to look for SMTs. So you could look for SMTs and inversion fair value gaps. So let's say here you would look for SMTs with ES and NQ, and then an inversion fair value gap back towards the gap. So boom, you take the shorts, and then you would target unmitigated gap, sorry, because there's a lot of orders sitting right here, okay, buy orders. Let me see what price is doing right now. Wait. Market is dropping. Yeah, I just saw. But not much. So yeah, that's pretty much it. So in terms of like framework, it's really looking for a key level, SMT or no SMT. Market structure shift, you could use the breaker as your entry, or you could use the IFVG as your entry to target an unmitigated gap. And this gap right here acts as a magnet, all right? Just look at the chart. How many times do we just create? Did we just create a 15-minute gap and it got filled after finding signs of weakness right here, right? So yeah. Or of course, the normal approach would be, you know, to wait for the gap to get filled, and then once you inverse this gap, so basically you wait for the 15-minute bullish rally gap to get tapped, leg that created the sweep on the 1 to 5, inverse, small stab back long. Or another one you guys can do, so that's like explaining the framework in a good approach, you know. So that would be more of a, you know, SMT. So that's, let's say, your first play. That would be power of 3 on the M15. Right here would be more of a SMT plus IFVG. And the third one would be, let's say here, just a M15 tap plus M1. Bro, that guy's spamming me. M1 to M5. IFVG. And then the last one, let's say, that you can use is really, bro, wait, I'm getting fucking spammed, bro. God damn. All right, sorry. And yeah, the next one you could use, let's say, is the fourth, is like the RTH gap fill. So there's so many frameworks you can use. So you would wait for price to create a gap for 4:15 p.m. EST close, 9:30 a.m. EST open, goes down, Judas swing. So this is the RTH gap. And then you would look for an inverse fair value gap to fill this RTH gap. Boom. So that would be, let's say, your fourth framework. Well, like in terms of framework, like if you want to take a picture, that's pretty accurate. So unfilled gaps, target unfilled gaps based on structure. You play the reaction on the 15-minute. Gaps telling you that the trend is bullish or bearish based on what's being formed, or the RTH gap fill. That's a pretty good way to summarize. So let's see here. There's no gaps. I think there's a possible 1 hour. No, there's nothing. So let's say here you're still on the 5-minute chart. You're sweeping this low into a 5-minute fair value gap. So that would be like more risky playing it off of a 5-minute rather than 15. Like you wouldn't even want to look at a 5. IFVG is earlier entry than power of 3. No, IFVG is like the earliest entry you can take because you're basically entering before the flip. Let's say like let's say this is the previous candle and you're trying to long from the power of 3, right? The new candle will open, sweep the previous candle's low, all right? And then we'll start printing back to the upside. So when you're creating the wick, this is when, wait, let me see here. That's like a V. Yeah, I would take that, but all right, let me just make the make the explanation better. So let's say this is the previous candle and it's bearish. The new candle will open. You need it to drive down first, so it will look like this. But when it's driving down like this, it's most likely creating that leg. So then, once you inverse this gap, you're entering inside the wick of a candle. So if you can predict that the wick here is going to be formed based on this inverse, you would need to, like, this is the thing though. It's like people think that you need to hold towards buy side liquidity pools, but you don't need to hold it to buy side liquidity pools. You need to hold towards the close of that 15-minute candle. So when this 15-minute candle closes, you know there's most likely going to be accumulation, or you know, it open in the opposite direction, which is the moment where you need to get out, let's say. So on the open low, let's say on a brand new 15-minute candle opening, this is where you can find good inversion for value gaps, because you could be predicting a possible reversal candle on the 15. And if you do, then it doesn't mean that you need to get out at the first buy side or at a 1-to-1. Of course, like, it's better for, you know, being versatile through all market conditions, but in terms of where you should actually get out, it would be based on time, I would say. You know? But yes, IFVG is the earliest possible entry, because you're not waiting for the flip. You're entering on the wick creation. That's really it. So there's really three ways, like, to play a candle. It's either you play the continuation, the reversal, or the distribution. If you wait for the inversion of a 5-minute fair value gap, can you scale to the 1 for a candle closure, or disrespect instead of waiting? That's a really good question. The thing that you want to do with that is that you want to be cautious. Let's say what I would do in the past is that, let's say there's a 2-minute gap here. Let's say there's a 2-minute gap and there's no other gaps than the 2-minute. So what would I do? Let's say I would scale down to a 1-minute chart, and if we had an order block creation, let's say we created an OB, I would enter market here on the OB creation, knowing that if the next candle would print back towards the 2-minute gap, I would take a loss of like $50. But I know that in a lot of cases, as soon as you create that OB, this is where you rip, because you just broke structure to the upside and just squeezed every single one of those sellers inside of that range, even if you're still trading inside the 2-minute gap. So like, there's like stuff, let's say like the entry I posted yesterday on the short form. Someone asked me, why would you enter before the candle is even closing? Because there's 5 seconds left for that 1-minute candle to close. If I don't enter right now, this could end up being a displacement candle, which would screw up my RR. Let's say you're here and this is the fair value gap, and you're trading up here. You're trading up here and there's 3 seconds left for that 1-minute candle to close. Will I take the chance to just wait for that full candle to close, knowing that it's displacing to the upside and it could close right here, giving me the worst possible RR? No, what will I do is that I will enter knowing that if it bounces back and closes back inside the range of that 1-minute candle, I'm gonna get out for a small loss. So that's just one thing you need to do in a lot of cases. It's like, and you need good execution and good understanding of timing. And the timing is the fact that, okay, there's 1 minute left for that candle to close. Let me just go in right now. PO3 seems less subjective entry than IFVG, because yeah, 100%. Just know that, let's say when I take a trade, I usually use the power of 3. Like, my main strategy that I use on my live account is power of 3, is like a derivative of the power of 3 concept. You know, the power of 3, in my opinion, is the only concept you need to understand, really. Either you enter on the wick formation or you enter on the distribution. So that would be an inverse, let's say right here, boom, candle just closed. what do you think is going to happen? We would pull back here, see a wick being formed, so covering. So all those sellers got squeezed here, and then those sellers will sell the shares back down so they can cover and click on buy to get out of the position since they got squeezed. And as soon as you will see that, you will flip above this 1 minute opening price, creating a bullish candle, and then it will start driving to the upside to sweep that internal high. That's what we expect. Do I take this trade? No, because it doesn't fit my, let's say, criterias on the 15. But one thing you don't want to see is exactly this. Boom. And this is exactly the reason why I didn't take this trade, is the fact that you're looking at a 5-minute chart. So let's say your box here that you will draw, let's say here, first of all, you disrespected that gap on the 5, which tells you that you're not even looking for longs anymore. You would need a zone which is getting respected, and the only zone that is could potentially give you a long is this one just below us. So for you to take longs here, you'll most likely get squeezed out of that range. So like a lot of people, they will take unnecessarily losers right here just because they're FOMOing into an inverse on the 1 minute chart. Lumi enters earlier on OB within wick. Yeah, that's good. You know, if you can find your statistical edge based on the fact that, okay, we see this many reversals at this time in the last 4 years, let's say, and you know how to execute it, then you're good. You know, a lot of people, I think, are just too focused on finding big picture plays. That's really it. It's super hard to forecast the market. If you can just focus on the power of 3 of a 15-minute candle, it will be so much easier to catch one-to-one scalps and be pretty decent. You know what I mean? Like, let's say you have a 15-minute bearish candle, new candle opens, sweeps the low, boom, and then you have an inverse for value gap right here. You would take it, stop loss right here. If it stops you out, it stops you out. If it starts going up, you would wait, you would hold all the way to the close of that 15, all the way to the close, boom, and right here you get out. Pretty much it. You know, this is why, let's say, if you take a look at my last video that I posted on YouTube, I said multiple times, like, you only need to predict one candle. It could be a 5-minute candle, it could be a 15-minute candle, a 30-minute, an H1, a 4-hour. But the higher the time frame, the harder it will become to, you know, predict that candle, because so many stuff are happening on the higher time frame. You know, supply and demand levels, are, you know, way stronger on the higher time frame. So an order block on the H1 is super, you know, means a lot. There's going to be a lot of participants that are going to enter in the market on that order block, trying to defend their position, or because they really like that area on the chart. So predicting, let's say, a 15-minute play with a 1-to-1 risk to reward is, of course, way easier. You see here, let's say, this is basically what you need to look for. You opened on the next candle, swept that previous candle's low. Right now you're driving down towards a key level. And right now, knowing that every single candle has a open, high, low, and close, if this candle creates the low first, which is what it's supposed to do, then starts to flip above the opening price, you could be super early in a move, which would be a reversal, okay? Which would act as a reversal candle. So if you're in this, then you could let it all the way, you know, enter this trade and let it all the way to the close, and at the close you would get out of your trade because you predicted that this order block had more chances of creating a bullish candle than a bearish candle. And just predicting, being able to predict one candle and understanding what's really happening, what is the timing of that, you know, downwick creation, is possibly the real edge, you know, not really the inverse or, you know, the bounce, etc., etc. That's really the framework I'm talking to you guys about. The framework is the most important thing. But there's a lot of ways to view the market. Just find your own approach. It's either you tap if you like OBs for, you know, possible bounces, it's good. If you like, you know, if you like for value gaps for bounces, it's good. Just find your own way. For me, what do I see here? I see displacement. You see this candle? It's displacing. So right now, if we, let's say we do close like this, I could find signs of weakness to go back towards this 15-minute gap. I know that there's a lot of chances of us going back towards the gap if we do close like this. I don't mind if we don't open a low flip right now. You could wait for the next candle, which is even better if you wait for the whole new candle to open, which would drive down back towards below the slow here and then flip. That's an easy scalp towards the upside. These are base hits, like easy base hits you will find. Not just pattern trading. You need like a little bit more than just the one. You need a reason to enter on the 15 or bare minimum, like bare minimum. Not just, let's say, from a bounce but perspective, but from a how does a candle actually work. And I think what I just said is really valuable information, but you could deduct that by looking at, let's say, other videos. Why don't you wait for a higher time frame for value gap like M30 instead of M15? I don't like the 30-minute chart. I'm not gonna lie. The 30-minute chart is unreadable for me. That's one thing. Let's say an H1 would be better, but you would have, the higher the time frame, the higher the time frame also will be your entry. Like your entry cannot be on a 1-minute chart if you're looking at a 1 hour, you know, framework. It will have to be a bare minimum on the 5. What was the criteria M15 missing? I don't know exactly what you're talking about right now. What was the criteria the M15 was missing? Right here, like there was just no trades because there's no M15 gaps, let's say, or M15 key levels to play the open, high, low, close. So right here, you see, this is a good thing. So right here, you created the low of that candle. Right now it's 35. We know this candle is going to close at 44 and 59 seconds. So if we start getting above this inversion for value gap, then if it holds, we will most likely close bullish like this. So you could hold all the way to the close of that candle because you were able to predict a 15-minute bar. That's it. Or it could sweep this internal high and then start rejecting and closing here on the 15. This could also happen. So you need to find, you know, a good middle ground on, you know, when are you going to take profits. Does that make sense? I think it was pretty good information right here. Pretty valuable in terms of what's a candle. It all comes down to, like, after 3 years, that's what I said, like after 3 years, let's say, of trading every single day, you just understand that you need to understand the basics so well, and then you're good. You don't need super complicated concepts. It's exactly like boxing. If you have the jab and the 3 punches, the main punches, the jab, the cross, and the overhand, I don't know exactly how to say it in English, but you're good. It's exactly the same thing. If you understand the timing of a candle, P to raise, risk to reward, so you see right here, why is it, let's say, a better trade here than this one? Let's say the one that we saw here is the fact that the leg that created the sweep into the order block is this leg. So from this swing high to this swing low, and this is where the gap is at, you know, from the leg that created the sweep into the PD array. But right here, the leg that created the sweep was from this swing high to this swing low. So if you're using a gap above it, then it doesn't really make sense. You could, of course you could, but it's based more on a 5-minute structure than a 1-minute play for a quick scalp, let's say. I'm learning so much. I appreciate you. Appreciate you. 61 likes, come on. But yeah, the basics are super important. And that's really the thing that I respect about ICT, is the fact that he uses timing. And I think this is something that is not not a lot of people are preaching the fact that he bring up the timing. It's not really to just look at the market from 9:30 to 10:50 or to 11. It's really to understand what is happening inside of a candle. When does the wick form? Looking at SMTs, Peter Ray's getting respected, disrespected. Best case scenario, let's say here, we close, we accumulate, we then manipulate towards the slow, we inverse, we target the 15-minute unfilled gap, which is going to be created from this candle. It's right here. So this is your order block. You could see a potential reversal candle from this order block bounce, 100%. But if you don't, you would want to see a drive back down on the new candle to sweep this accumulation. But the thing is then you need to have rules that are telling you, okay, I am looking for order block bounces. So then if you're looking for order block bounces and fair value gap bounces, you're mixing up two different frameworks to play the inverse, which is going to give you different results based on market conditions. Sometimes you will see the order block basically giving you better moves than the fair value gap, so all depending. So right here, what time is it? 4. I'll take a long here. I wasn't quick enough. I think I wasn't quick enough. I don't think I was quick enough, guys. Let's see. Alright, I was quick enough. So right here, boom, in longs. Let's see what it does. Tight stop though. That's light risk, 100 and what? 180. Now we could see a pullback here. I would want to see an order block creation here. If we create an order block on the 1 minute, I wouldn't want to see any pullbacks. What time is it? 43. That's not bad. That's 44. Yeah, we just held on that. Damn. That's crazy. Closed here as what? Yeah, it could open low. Yeah, so 130 loss here. We just held on the 15 minute. That's crazy, but yeah. Small stab here at longs based on the open high low close on the 15. Take a loss here. Let me see. Yeah, for sure. But I think overall it was still a good trade, knowing that it could have flipped here and started to go up based on the 15-minute candle, how it distributed. Still a good scalp here. There's the 44 candle killed us. What time is it? Yeah, the market is closing right now. Damn. So we took 2 trades. One got stopped out to break even on the same exact framework than this one, but it was this trade right here to target back the 15-minute gap, and right here was the trade that I took long for that 15-minute flip. Got stopped out right here, so like $140 lost on only just one account, 150k, so that's pretty much nothing. But yeah, the market is gonna close in like 13 minutes. One handle is one point. It's like four ticks. So from 70, let's say 2370 to 2369 or to 2371. That's really it. Alright, but that's basically it for today's stream. I appreciate you guys for showing up as always, I see you guys tomorrow. There's a bank holiday, so I'll probably host a backtesting session tomorrow, anyways, to make the live on Friday, even if there's no trading day. But yeah, I appreciate you guys so much for tuning into the live and participating. See you guys tomorrow and on Sunday for the Sunday recap. Peace out.